Hey everyone, this is Robert Keats at goldsilverpros.com. It is Tuesday, October 20th, 2020, and we're getting really close to Halloween, All Hallows Eve. And what wicked things are we going to see in the markets? I have a wicked prediction for you guys that I wanted to share with you. Somebody I consider a pretty sharp guy that I like to listen to for quite some time, made a prediction here on Kitco News about Civil War. Now, I recently watched Doug Casey present at the New Orleans Investment Conference last week, where I was a guest and invited you guys to come along as well. Hopefully some of you joined us. And there was a panel with Doug Casey and Tucker Carlson and a few other people as well. And they were talking about politics and in general what's going on in the economy. It's a very interesting debate. Hopefully you guys saw that New Orleans Investment Conference. And it looks like today Doug Casey is doubling down on his talk of unrest in the United States. And he's saying here that there will be another civil war, and it's more likely now than ever. So I'm going to read here from the article here at Kitco. The chances of Americans clashing in another civil war are now higher than ever, said Doug Casey, who noted that in today's environment, gold and gold stocks in particular have not yet begun to see the highest price peaks. So what's the next bubble? And what a speculator has to ask himself, and the answer to that is gold, also commodities in general. In particular, there's going to be a super bubble in gold stocks, Casey told Kitco News. Now, I do agree with him on that. Casey is a founder of Casey Research and internationalman.com and author of Crisis Investing, Opportunities and Profits in the Coming Great Depression. I agree with him because I wrote a book back in 2009 and published it in 2010 about the coming Great Depression as well. So Casey and I have a lot in common on what we think is going to happen to the economy. It goes on to say the article, fund managers have been miseducated about gold since university, and so gold stocks are not even currently on the radar of most institutional investors. And I second that motion. They are not on the radar, and we have not seen the bubble in gold stocks even close yet, because we haven't seen the bubble in gold yet, and nobody's even touching the stocks. These gold mining companies are coining money at this point, and eventually they're going to figure it out, and they're going to pile into them, he said, adding that the gold mining and sector's entire market capitalization is lower than Apple's cash reserve, which is true. So gold is money, and yet Apple, a technology company which makes iPhones, of which I have one and appreciate, it's a good piece of technology, it is valued at more than the gold mining sector's entire market capitalization. In fact, just their cash. There's something kind of wrong with that, I think, but you know, it's the tech age and people like to invest in tech stocks, and what are you going to do? Want to get your guys' thoughts down here in the comments, what you think about Doug Casey's predictions about the gold stocks. And do you think we're headed to another civil war? Now, I really don't want this to turn into a political discussion as much as how do we prepare for these types of things, whether it be a civil war or just general, unrest going forward as we continue to have some economic problems. And hopefully we can have a good conversation about that in the comments below. And I'll be joining you guys as well, and also be in the chat for this premiere this evening. So if you guys want to talk about that, feel free to make your comments, as long as we all keep them civil, please. All right, we're going to go on to the gold and silver market update, as we do pretty much every Tuesday. And we had a little bit of a bump in gold, about $6.69, and about 33 cents in silver. Nothing to speak about. And again, the range trading, and I'll show you that on the chart. Gold did pop below this trend line since late 2018. So this green line, I'll go back to the long chart here, the 12-year chart. And remember, I drew this green trend line from when gold started to pop. Remember, we had that 20% stock market correction in late 2018, quarter four of 2018, as the Fed started to tighten. Powell said, I'm going to tighten. Stock market corrected 20%. Fed went back to loose monetary policy, and gold has been rising ever since. And I drew this green sort of cup trend line to show sort of what the trend is. And I said in the last video where I covered this, I want to say it was last Thursday, maybe it was last Tuesday, I don't remember, that gold had bounced off this trend line and it could retry it again or keep going up. And that would tell us if gold is going to be a little bit more bearish or a little bit more bullish as we head closer to the election in December. And looky there, it crossed that trend line. Now it's hugging that trend line. So what that's saying is speculators and investors are saying, I'm going to go to the bottom of this trend line right now because of the uncertainty. And because that seems just like a good, safe place to go, it's kind of like home base in baseball. I just kind of want to stand here. I don't want to go anywhere because the market's undecided about what's going to happen next with gold. So we're really in sort of this range trading pattern in gold until we get some more news. And I'm going to show you where there's a lot of activity. You guys have seen me harp on this forever. A lot of activity in gold open interest here in the December contract, 451,000 contracts now, as I stated on Chris Marcus's Arcadia Economics show last night. For those of you who tuned in to Mr. Marcus and saw me talking about silver there, silver stocks there, and silver news, please go back and watch that video on his channel if you haven't done so already. You also see a nice buildup in February, the next trading month, of almost 50,000 contracts. So we've got a nice little buildup for next year already, people taking their positions. Now, what happened on the settlements is, and why gold rose a little bit, you can see that there was 160,000 contracts traded at 1915.4 settlement of gold price, meaning the settlement of these gold contracts was a little bit higher than what gold was trading at. 1909 actually started at 1903 on the day. So yesterday's trading pulled it up from 1903, split the difference between 1915 to land at 1909 as our current price. That's why the price moved. You can tell by the settlement data. Now, there was a little bit of people going short gold here. You see 4,800 contracts at going long at 1922. You saw a little bit of shorts down here at 1910, 1911, or actually slightly long, I would say, not short, maybe kind of down the middle. But basically, these 160,000 contracts and these 4,000 contracts at higher price gold is what pulled that gold price up. And for those of you wanting to know how the price is determined, it's basically on the volume of contracts and what price they're settling on and how many in each category as to whether gold moves up or down. And then you take the basically average of all of this volume that you see trading in the nearest big delivery month, which now would be December. You take that average and that sets the spot price. That's how spot price is set. So I wanted to kind of explain that for you guys who may have just joined the channel recently. Now, as I always do, we're going to move to the COT chart, which is the commitment of traders chart, which shows what each individual group of traders is doing on the futures exchange. And I've moved over to the bar chart because it's easier to read than the long report from the CFTC. But if you want, you can go to CFTC website and look for the COT report and get the sort of messy data table if you like that format. I like the visual format down here. And it's really cool when you put your cursor down here, you get this little yellow pop-up box right up here on the upper left part of your screen, which tells you exactly what each category of trader is sitting at. I just like to look at the trends, and you can see this yellow line, which is the other reportables, which is the wealthy people and the family businesses and trusts are increasing their long in gold, presumably to take delivery in December. That's a trend that we have been covering. The managed money, which are the financial guys and usually don't take delivery of gold, just trade the price around or hedge their price risk in other investments, stocks or whatnot, are slightly reducing their long position. So, and it looks like overall the swap dealers in green have slightly reduced their shorts on gold. So they've gone slightly long, not a lot of movement, but the biggest thing to note is who's going long, because that's who's going to be taking delivery. It looks like the other reportables, the wealthy individuals. One thing about gold that I wanted to let you guys know is that Swiss gold exports to Asia tumbles, bullion flows to London. So a lot of refining done there. So a lot of exports from the Swiss will tell you where the gold is flowing, because a lot of the gold comes in, it's refined, put into bars and coins, and goes out to the rest of the world. So there's a nice little chart here in Kitco tracking what's happening to the gold exports. China and Hong Kong has settled down this year since the COVID crisis. We've had an increase, however, to Britain, to the US, and to other countries here, as you can see on this nice color-coded chart. So basically, Western investors have overtaken Asian investors for gold demand. Now, seasonally, Asia tends to do very well. China, India, and some other Southeast Asian nations, because they use gold and even silver to some extent in their sort of holiday rituals, weddings, and things like that, a lot of which occur in basically the fourth quarter of the year. So it's interesting to note that Western demand has increased over the Asian demand this time of year. We'll see if that trend continues, but that basically shows you where all the gold is going to once it gets refined and gets out into the market, of a lot of it flowing to London, to the US. Of course, we see that on the COMEX exchange, and I'll show you the exact flows here amongst all the ETFs and the futures exchanges in a moment for both gold and silver. So now I wanted to look at silver volume. I'm going to switch over to silver here after talking quite a bit about gold. And Casey's prediction that we may have an oncoming civil war, and that means gold is going to pop. We're looking at silver now. Of course, December is the big decision month in silver. And I don't think, like my wrong call in September, this is going to change. I think silver will have a decision month in December. I don't think that's going to change. Now, you could see some contracts roll here to March. Not many people are doing a lot of contracts in January for open interest or delivery, but they're doing it in March. So you could see, as we get closer to December, specifically as the election is settled or seemingly settled, as long as we don't have to count a lot of mail-in ballots and take a month to do that, you could see some of this silver interest roll off to March, May a little bit. As you see the volumes here, there's been a little bit of volume added here, but there's still more being added to December. So I still think December is going to be a big month. And let's look at the settlements. Now, if we look back at the price, silver did go up 31 cents today. So as we look at the volume numbers, why did it go up 31 cents? Well, silver was basically trading at about 24.50, which is that resistance line we have in silver that I've showed you guys many, many times. So a lot of the contracts came in slightly higher at 24,980. That pulled the silver price up because you have contracts settling for a higher price on the December contract. That pulls the near-term spot price of silver up. Remember, to understand how spot works, you look at the nearest big delivery month, the nearest delivery month that has the most trading, you average out all those trades, and that sets the spot price. And you can tell that by some of these settlements. So as of Tuesday, October 2020, we have 56,000 contracts settled at a price higher than where it previously was. That pulled up the silver price, and that explains how that market works for you guys following it. Real quick, I'm going to get to delivery notes. Just like I always do, there is not much happening here. You're going to see in the gold futures that we only had 21 contracts for delivery as of yesterday, 10/19. If we scroll down here to silver, we had a big whopping 1. So not a lot going on in deliveries, not a lot to report. So I'm not going to expound on that too much or spend too much time on that. But people have gotten their deliveries for October pretty much. It looks like they're waiting till December to go get more, but we have had healthy deliveries in both gold and silver, especially gold for October. So there was a lot of physical movement. I'm going to go to the silver chart this time. That is the commitment of traders. That is what the groups of traders are doing, the producers and merchants, the swap dealers, which are the bullion banks, the managed money, which are the financial types, and the other reportals, which are basically the rich people and rich businesses. And you can see this uptrend right here, this yellow line that I'm highlighting in a delivery for silver. So I expect to see in December a lot of the wealthy individuals taking silver off of the COMEX futures exchange and physical delivery. We see the managed money fading out towards the end of the year. They're not going to take physical delivery, and they're expecting the silver price overall to fall a little bit. But this is really a range trade because not much happening since July. They've been basically even since July, and not much else going on. So silver, not a lot going on in terms of changes of how traders are putting their positions on the futures market. So again, that's why we get this drift in the gold and silver price. They're range trading because at the futures market, which determines the price, not a whole lot going on. Now I wanted to get into the flows of the ETF. So I picked out the silver ETF specifically. This chart's from Gold Charts R Us. And I wanted to show you that we have had a healthy amount of silver flowing into iShares because a lot of investors, well, it was basically flatline here from 2011 to 2019. And then there was a little bump in 2019. And then 2020, we had the shutdowns and the financial issues. Tons of people got into silver then. Now that things have kind of stabilized a little bit in the economy, we don't have a lot of bad news the last month or so. The flow or the purchases of the silver ETF and then the ounces they have to purchase to back up those shares has fallen a little bit. And that's basically coincident with the fall in the silver price a little bit over the last month. So those basically are related, but I wanted to show you that. But we see, even though there was a flat line in terms of overall amount of silver held, basically shares held as well in the SLV, this little spike in the price of silver and the delivery into iShares has led to this little cut pattern and this little handle forming. So again, that's a little bullish in terms of what will happen to the overall value of silver being held in iShares silver ETF. A little bit of bullish news there for you on silver if that chart pattern holds. And this is a really cool chart I found at Nick Laird's site, Gold Charts R Us. I love his site. There's so much information here. I'm advertising for him, even though I have no affiliate relationship with him. It's worth the $200 if you're really into the metals. If you especially invest in the stocks of the precious metals, spend the $200 and get access to this. Here are the silver depositories for everywhere. This is really cool, all in one chart. You can really see the silver flows, and I'm going to show you gold here in a minute as well. There, as of October 19th, which would be yesterday's data, There was 578,000 ounces of silver coming into the registered category. That's the one where it delivers to the futures contracts, but about 2.6 million flowing out of eligible, which is the private holdings on COMEX that don't get put against futures contracts, for a net loss of 2 million ounces on the COMEX. Again, silver flowing off the COMEX. The 4-week change, however, is pretty big. Net on the COMEX, 12 million ounces have come in, presumably to prepare for December deliveries, the people standing for delivery of those 129,000 or whatever it was silver contracts. So a lot flowing in to cover for those upcoming December month. Again, when you see this much flowing in and you see all the open volume that I showed you in the silver chart, that's basically predicting that we're going to have a lot of deliveries and there's going to be a lot of silver movement. So if we go back to the volume numbers on December contract, you've got this 127,000 contracts, and then you got another 20,000 down here in March. And that's why you're seeing all this silver come into the COMEX. Now on the iShares, which I showed you back here, I showed you like a time chart of iShares. There was an addition of 651,000 ounces daily change into the iShares as of yesterday. So healthy investment iShares, even though it's pulled back as of the last month, healthy investment yesterday. In the Sprott PSLV, there was also 300, I'm sorry, in the ZSIL, the ZKB, there's 320,000 flow in, and in Sprott 22,000 flow out. You had all of that up, including the COMEX numbers, and you had 1 million ounces, 1.1 million ounces of silver taken off of the exchanges and the ETFs as of yesterday. Really cool to see that. And here's the total silver ounces held. Even though we had a little bit of a pullback in the SLV overall, more silver ounces held, more overall value held in silver for this year, and the highest value of silver held, even at the peak in 2011, we had the last financial crisis, already being held. So people are investing in the precious metals, but a lot of it is the move up in the silver price as well. Very interesting. We're going to go to gold here. Okay, now here's the gold chart. On the COMEX yesterday, 160,000 ounces moved into registered up for futures delivery. 125,000 moved out of eligible off of the exchange for a net change of 35,000 positive ounces. And the 4-week change is 1 million ounces total have come into COMEX for delivery, or total on the COMEX in the exchange, whether for delivery or in storage. So again, 2 million of that for delivery in the registered category, presumably for December delivery. So again, another reason why I expect healthy December deliveries of gold, just like along with silver. Now you've seen some flow into the iShares ETF, 107,000 ounces, and the SPDR, the GLD fund, has saw a loss of only about 2,000 ounces, not a big deal. And that all of that adds up. COMEX and ETFs adds up to 135,000 positive ounces back into the ETFs and in the futures market. Yesterday, and in the last 4 months, 1.8 million ounces. So in other words, lots of demand for gold when you see those kind of numbers between the ETFs and the exchange. Going to focus on silver again here for a second. I'm looking at the silver miners ETF, the biggest one. It basically, not much going on there. The miner shares have reduced a little bit, down to about 4509 on this chart for this silver miners majors ETF, and the SILJ, the juniors, is identical. It's funny. You look at the chart, you can't tell the difference except for you're looking at the name. This is the SIL. This is the SILJ. It's the exact same chart. So the cool thing is the juniors are following the majors, which is good news because usually the juniors lag the majors and the money comes into the majors first, but we're seeing some healthy investment in the juniors as well this year. That is a very good sign. This is a 6-month chart, but very good this year. Healthy investment into both the silver juniors and the major miners. That's good for silver. So we see a lot of silver coming into the miners, and I'm going to flip back to silver here. We see a lot of silver, 31 million ounces coming into the ETFs and the COMEX as well. Very bullish for silver. So that's why I'm very bullish on silver. So that guys, is the report for today. Very interesting news from one Mr. Casey, very well respected analyst in the precious metal space and in the freedom space as well as a libertarian. Will we have civil war? I don't know. Feel free to discuss it below. Certainly a lot of unrest and things going on in the country right now. But in any case, what we see is a lot of interest in the precious metals, a lot of buildup to the election, what's going to happen, big delivery month right after that. That is all super bullish right now for the precious metals. So wanted to show that for you guys. Stay strong if you're in the precious metals and the precious metal stocks. Don't give up. You have not seen the final days of that bull market yet. we're in a consolidation pattern here. That's going to break out in the next month to 2 months. I'm pretty darn sure. And it could lead to an extremely interesting 2021. Again, I wanted to invite you guys to go back to yesterday night's video on Arcadia Economics, where I spent about 25 minutes talking to Chris about silver specifically, what's going on with the miners, what's going on with the market, what's going on with the economy as well. Please feel free to check out his channel. Till next time, guys, that's Robert Keats, goldsilverpros.com.